When you consider it, one of the reasons crypto hasn't taken off is because the networks are so slow. They haven't grown in a long time. It's because ordinary investors' income hasn't kept pace with price increases, resulting in a loss of discretionary income. People can simply dollar cost on average, with fewer involved as a result. So what we're witnessing here is ETH activity. People are trading NFTs and the money stays in the ETH economy, and there has been some swapping between Solana, Avax, and Luna, for example. However, the space isn't developing because of the salary and inflation issue. As a result, the dynamic must change. For our video today, Raoul Pol, macro investor and CEO of Real Vision, updates on the important macro variables driving the crypto markets, the economy's decline, and the Fed's shifting narrative. Raoul also discusses his recent cryptocurrency collapses and why he no longer believes in Bitcoin's 4-year cycles. Make sure to watch all the way to the finish of this video, wherein Raoul discusses the key events that could lead to the next crypto surge. Welcome to Cryptique, a channel that gives critical evaluation or analysis, especially in dealing with crypto. Everything regarding money, finance, investing, cryptocurrency, and blockchain-related topics including ICOs, NFTs, and yield farming. Please subscribe and share this video. Also, do hit that like button. I believe that macro needs to alter, and bond yields will most likely be our indicator. Or perhaps oil, if oil degrades. Until that changes, crypto will be unable to maintain a surge. And there's a group of folks attempting to get the Bitcoin ETF approved, which is expected to happen in June. Perhaps one of them will recognize it. That, in my opinion, is too little to jolt the market. You can purchase Bitcoin if you wish, but it hasn't been increasing in value. That only helps on the outskirts. Then, when the ETH integration happens in late summer, I believe it will help as well. Because this produces a distinct dynamic and yield strategies for institutions that are quite fascinating. As a result, I believe those elements are quite significant when taken together. When crypto surges, the bull legs tend to have 300 to 500% rises. In the next rally, that'll be 150,000. Let's assume it goes up 5 times, then corrects a little, and then goes up again. You can see how quickly the performance compounds. It bears no difference to us whether it's 3 years or 7 years. The key is that Bitcoin's long-term logarithmic trend is still in place, and we'll see how that tendency develops. However, we can predict where it will move over time. Raoul Pol, a cryptocurrency expert, believes that present crypto bear market would finish only when the Federal Reserve eases its hostile monetary policy by suspending interest rate hikes. According to Pol's projections, this might happen within the next few months. Raoul believes that Fed will not hike rates as far or as quickly as many others predict. My guess is that they will cease hiking rates in the summer, and that will be the end of it. Pol also believes that the current crypto bear market is being driven by a mix of high interest rates and fears of an impending recession. Retail investors' income has not increased in tandem with price increases, resulting in a loss of discretionary income. As a result, people can only spend less money on average and become less involved. Pol believes that market's bottom has yet to be achieved, and that a big liquidation phase encompassing crypto and legacy assets is on the way. If we see a liquidation rise in equities, crypto could see one as well. The market will inevitably capitulate at that point. He states, "I don't trust in the halving cycle. I just feel it's less meaningful now that there are more participants in the sector." As a result, it does not become the primary driver, but rather one of them. Moreover, as we've discussed, macro is now a major player in the space that it was never previously. Since there are a variety of market participants, the structure of the markets has also been altered by diverse participants, such as institutional investors and hedge fund investors. So it depends on when they have funds available and they don't have funds available. So there's the market, which is changing in terms of ownership and players throughout time. The logarithmic network adaptation model, which is Metcalfe's law, has always been the main structure. Whether there is cyclicality dependent on the halving cycle or not, this is the essential structure of markets. It's almost completely irrelevant. What we're trying to argue is that adoption is everything in the long run. What are the main factors that cause network effects? I discovered that two variables accounted for the majority of pricing variation. They are the total amount of addresses that are active, but more crucially, the value exchange on the network. For two reasons, Bitcoin is more valuable than Ethereum. Although Bitcoin has somewhat more active wallets, Ethereum is quickly catching up. Therefore, the Bitcoin value exchange is higher. Terra Luna, for example, is purchasing Bitcoin in large quantities. MicroStrategy appears to do this as well. These transaction sizes indicate the network's worth when there are a lot of them. It becomes more valuable when a large number of individuals participate. PEP has a much higher number of transactions than Bitcoin, however, they are of lower value. So, although the number of players is either more or lower currently, the total value being transferred on ETH is really less than Bitcoin. In either case, the value is transferred. This is a crucial aspect of valuing the network. According to Paul, the Fed will loosen its monetary policies at some point, enabling some liquidity to pour into financial markets, igniting the next crypto surge. Bonds, cryptocurrency, and possibly some technology companies will all gain, according to Paul. Aside from the macro picture, the adoption of a Bitcoin spot ETF and Ethereum's move to a proof-of-stake mechanism, which is due in Q3, are two other variables that could aid the next bull run. For the past year, the market narrative has been inflation with several aspects of growth. As people recognize that growth is soon to vanish from the economy, the narrative is shifting. Factors like the ISM survey and several forward-looking indicators have started to deteriorate. This is the subject of a large piece I just published on Real Vision. Forward growth is significantly reducing, resulting in this position in the market for inflation and a healthy economy. When you consider economic growth into account, all viewpoints become problematic. As a result, whether you're long commodities, equities, or technology, everything becomes blown up at the same moment. Because changing the framework within the markets causes the markets to struggle. I believe the regime will eventually turn to deflationary conditions, with inflation vanishing and growth slowing. The speed of development in 2-year interest rates has been the quickest on record, indicating that the financial markets have tightened ahead of the Fed. As such rate hikes take effect, the economy begins to slow. As a result, the Fed is reluctant to increase rates as substantially or as quickly as many people anticipate. My prediction is that they will cease hiking rates in the summer, and that will be the end of it. Because the economy will slow down and inflation will slow down, that is precisely the atmosphere that crypto enjoys. Crypto prefers a slower rate of growth. The Fed appears to be on hold or at ease. That's precisely what occurred in 2018 when crypto was at its low. We've now got a fairly comparable scenario. In the event that the Fed's narrative shifts and the markets catch up, bonds, crypto, and possibly some technology companies will climb. So that's the time frame I'm hoping for, possibly starting in the summer. But first, we have to get from here to summer. This is when the concern of positions being liquidated can be addressed. The dollar is rapidly increasing in value. This destabilizes markets, and equities markets are unable to regain a footing. Assuming we stick to 2018, they'll probably drop another 10% in the last phase, as it's customary. So, if you think this video has clarified some things for you, please consider liking it and clicking that bell button to be notified of our new videos. Also, you might want to consider subscribing to our channel. It'll really help us out. Back to our video. However, I believe there will be a last phase that will include all assets with it. You are aware that gold is being hit today. Cryptocurrency is struggling to gain momentum. I believe we ought to witness the threat of inflation subside. And as you know, if the yields stop rising every day, the bond market will most likely give us our signal. Every day, they continue to rise. However, once that shifts, the market story shifts. Then, I believe the narrative for crypto will shift as well. Furthermore, it was alleged that the $3.5 billion in Bitcoin bought as a reserve by the foundation established by the Terra blockchain developers turned untraceable after it was transferred to two cryptocurrency platforms. What transpired to put the cryptocurrency in reserve, as per blockchain forensics firm Elliptic, may become a major question if investors demand to reclaim losses sustained in the aftermath of the blockchain's collapse between January and March. The Luna Foundation Guard, or LFG, purchased Bitcoin worth $3.5 billion according to Elliptic's blockchain analytics tracking tools. When the rate of Terraform Labs' Terra USD or USD stablecoin began to plummet on May 9th, the foundation announced that it will purchase USD with Bitcoin from its reserve to sustain its one-to-one peg with the dollar. The crypto wallets that held the reserves were drained throughout the next day. On May 10, the leftover Bitcoin reserves were transferred to a Binance Exchange account in a single transaction. At that time, the blockchain analytics business was unable to determine if the assets has been sold or transferred to other wallets. So when do you anticipate the next Bitcoin rally? Let us know in the comments. And with that, this concludes our video. Acquired a lot of knowledge from this, we recommend checking out our other relevant videos from our channel. Also, consider sharing this video to any friends or family members who might find it useful. Until next time!